Moving the needle on founder failure, one conversation at a time. I'm your host, Justin Gordon, and welcome to Startup 2.0 by Spark XYZ. Join us each week as we give you access to some of the top investors and entrepreneurs in the country to help you think through and overcome the top challenges that startups face.
I think there's no better place in the country to be investing than Los Angeles.
What is the problem that you're solving and for who? Like, what is that specific pain point?
Sometimes when a company is not listening to its customers and just thinks it knows better than its customers, has a really, really hard time finding product market fit.
I want to see somebody that isn't going to stop. You know, this person, you just feel like they're gonna make it work.
Christine Harada is the president of IX Investments. She also has over 20 years of experience leading government teams as well as management consulting teams. And she was the chief sustainability officer for the United States under the Obama administration. Christine, welcome to the show.
Hi, thanks so much for having me.
Yeah, and a lot to talk about your career and things you're working on. And with IX Investments, what exactly is that?
So we are an impact investing company structured as a permanently capitalized holding company. And so what that means is we're not a fund, We're actually a company. And we were founded by two men named, one's Trevor Nielsen, our current CEO, and the other co-founder is Howard Warren Buffett, the grandson of Warren. And so therefore our structure is very much an homage, if you will, to Berkshire Hathaway. And we aspire to become the first mainstream impact investing company that anybody can invest in.
Yeah, and with the impact investing, that side of things, so what areas are you exactly focused on?
Sure. So we believe that you don't have to sacrifice returns just to make a good positive impact on people and the planet, et cetera. And that fundamentally we invest in those businesses that seek to change the world and do good things while providing a top-tier market rate return. Areas that we're currently looking at, a lot of our portfolio consists of investments that help address the climate change and the climate crisis that we're facing today, green commercial real estate, affordable housing that's also sustainable, waste to fuels, direct air capture of carbon. And then we've also got a portfolio of technology and media businesses that are also focused on doing social good, but leveraging more of those kinds of platforms.
Yeah, and can you explain a little bit more in depth, like comparing this type of model versus like a venture, a VC fund itself? This is not a fund. Yeah.
Sure, absolutely. So what's different about us is that, we have a fairly diversified set of holdings. So we ourselves have funds that we are GPs in. For example, the commercial real estate fund is a $500 million fund. We also invest in direct operating companies. And in that sense, we're probably similar to VCs in that regard.
Yeah.
We tend to invest in the earlier stage. We're not seed or angel, but probably call it Series A stage. And, the main difference, of course, with a fund, a VC fund, is that you've got perhaps a larger set of capital, if you will, with which that you can actually invest in a number of companies simultaneously. But one of the challenges with that, of course, is that they're on a very tight time frame. They have to invest almost right away. They have to divest. Oh God, I got to get it out of the way. And so those are some of the pressures that we don't have because of our model.
Yeah, you mentioned the levels that you're investing in. What are those typical check sizes or investment you're looking to make then?
Yeah, so we've invested anywhere from $50,000 to over $1 million.
Okay.
And again, the stage tends to be a little bit earlier.
Yeah, okay, perfect. And then you mentioned this kind of briefly, right? But can you just go through that investment thesis and if you tell people what that is for them?
Sure, absolutely. So our investment thesis is that we are looking for those companies. There are many companies out there that can do good things for people and planet while providing, again, top-tier market rate returns. There's ample evidence emerging, especially out there right now today, saying like if you as a company do good things in ESG, environmental, social, and governance, and or focus on impact, they have been shown to provide higher returns than their competitors who don't necessarily focus on that. And I think that there's certainly a lot of elements that are embedded in that, i.e. better management, better oversight, better governance overall.
Yeah.
But those are fundamentally the kinds of companies that we're looking for as we seek to change the world.
And with that too, saying that they do get better returns and everything like that, why do you think other people are not focused on that as much?
That's a great question, and candidly, a bit of a source of frustration for me. I think part of it's branding. Impact investments or impact investing, the terminology, I think came out maybe originally, call it about 7 years ago or so, and it was intended to convey that philanthropy is not just giving away money, that
Right.
we are also indeed investing in our community, and that it's a social investment, that we're investing in positively impacting these societies, et cetera. So I think it's a bit of a branding issue. I think secondly, also, it's a different thing for a lot of investors. I think for a lot of investors, my personal analogy is they're looking for the same thing. You know what? I like my cookies. I'm looking for a cookie.
Sure.
I want, last week I invested in chocolate chip. This week I got oatmeal raisin, and now I got like a double chocolate. That's great. And they all have to be an inch in diameter and a certain shape, etc. I'm trying to sell you a brownie, which I think is a superior product than a cookie, right? And it's triangular, but oh, look at it, it's got some nuts in it if you like, etc. I just want my cookie.
Yeah.
Right. So it's a bit of, I don't know how to think about impact investing. I can certainly see, or at least from an investor's perspective, they can very much understand the financial returns. Like, I got it, so here's what's my return on my investments, et cetera.
Yeah.
But on top of that, I don't know how to really assess this impact thing. Feels a bit California hippy dippy, kind of hand wavy. I don't know if that's necessarily something that I really want to get in. And again, for a lot of investors, if they have a lot of deal flow, they just don't have the time or the patience to try to learn new things.
Yeah, to learn more about that. And you kind of alluded to this already, but what is your kind of diligence process as you're going through evaluating these companies?
Yeah, so we're really looking for companies that actually embed impact in the mainline business. It has to be intentional. We're not interested in companies that do socially good things, i.e., so Tom's Shoes is a great example. Great company, love their products, but that model is based on you buy a pair of shoes from us and we will donate on top of that, et cetera. So that's not part of the main business, in my personal opinion. And I think that, we're looking for those companies where, again, that intentionality is there. It's in the mainline business, and that's the primary revenue driver for the organization.
Yeah, and with that too, then, evaluating these different founders and their business models, I mean, what are you looking for from the team, the founders themselves then?
So we're looking for a good mosaic of folks. So there's just stereotypically, there's like a visionary who's got this fantastic idea. And then there's the money person who has to figure out how do I go about and raise the funds, et cetera. There needs to be also a marketing person to figure out how you can actually go out and acquire the customers, et cetera. And we're also looking for operational, like real traction, people who've actually delivered in the past. Show me some evidence that if you're going to be developing a consumer product, what are the factories that you guys are considering? What are the ways that you're looking at actually doing the distribution? What kind of network and relationships do you have to really make that into reality?
And as you're going through this process too, I mean, how long does that process typically take for some of these companies you're evaluating to figure out if you want to actually invest in it or not?
For us, I would say it takes probably about 2 to 3 months in total from end to end, soup to nuts. From the time that we actually meet the entrepreneur initially, going through due diligence, let's take a look at your financials, what kind of contracts do you guys have, et cetera, to tying up the details.
Yeah, and is it at all challenging just looking at these different companies? Are there any ones on the border of okay, they're not, their core business is kind of, but maybe not, or do you not really see that as a pretty clear between that? Because the Tom Shoes, obviously they're selling shoes.
Yeah,
but they have
I
that
would
mission.
say there are, and that comes in a couple of different flavors.
Yeah.
First is, it's not in our bucket of impact-oriented investments that we want to make. So, for example, we care very deeply about climate.
Yeah.
And so, I've seen some companies that come along and they're GovTech, right? So former government, I love the field and I care deeply about it. It's just not something that we want to invest in. And in those cases, then I will refer them on to other investors.
Yeah.
And then there's some folks for which the impact seems very secondary, tertiary, or it's not very well defined, nor is it very well quantified or quantifiable. And so typically for those kinds of organizations, we'll say either A, go back and scrub it, or, B, we're, and or stereotypically also in those kinds of cases, their business model isn't very well fleshed out yet either. And so that's where that'll show up.
Yeah. And are there one or two portfolio companies that stand out and then maybe why you invested in them?
Yeah. So I'll focus on two. I think first our waste to fuels business. We're addressing, so this is a company that we are basically exporting a proven American technology to overseas to places like Panama and the Philippines. And it helps to address two fundamental crises. First is waste, municipal solid waste, i.e. landfills, the amount of obviously methane emissions, et cetera, that's associated with that. Places like the Philippines have a full-blown crisis. It is awful. And so this technology enables us to take the landfill waste and convert that into basically aviation fuel through a long process, chemical engineering, all that other good jazz.
Yeah.
And so it helps to address, again, the climate crisis in that it produces a far lower carbon intensity aviation fuel that we can now leverage here in regular airplanes. It's a drop-in ready fuel.
Yeah.
It's one example. Second example is our $500 million commercial real estate fund, where we are partnering with a company called Rising Realty Partners based here in LA. And we are basically decarbonizing the existing building portfolio stock. And that might be fairly climate wonky terms, but fundamentally it's about energy efficiency and savings, and doing value add real estate, converting older buildings into more beautiful properties, et cetera. And just, in that upgrade process, you're dramatically improving the energy efficiency of the building, and you get some fantastic returns for real estate.
Yeah, and with these portfolio companies too, what are some of the challenges they're facing as they're trying to grow?
So for those particular examples, they're fairly different challenges. So with respect to the first one, waste fuel, the challenges there are more around doing the development itself. So finding the appropriate partners on ground, where are there enough waste sites, and then solving through some of the technical challenges. And with respect to the Green Commercial Real Estate Fund, that is much more about overcoming, back to my earlier point around investors who are very accustomed to seeing a particular type of investment. And so when you add words like impact or sustainability to a real estate fund, I think, that's when I start to see a lot of eyes glaze over.
Yeah. Yeah, that makes sense. And then as you move forward with these different companies too, are you pretty hands-on with helping them out as they need it? I'm just curious on your company specifically.
Yes, definitely. Okay. So we're very hands-on. We leverage both our expertise as well as our networks. Granted, with a lot of the work that we're doing in the climate front, I have a lot of friends from the Obama administration who do a lot of work in this particular area. And so it's been very helpful, certainly selfishly for me, to be able to lean on them and say, hey, this is the kind of things we're trying to look at, et cetera, and getting their advice.
Yeah. And what other things are these founders coming to you for? Do you think they're working with your company specifically because of those areas of expertise you have on the team? Is that maybe one of the main reasons you think?
I would say it's more of a values alignment is the messaging that I'm hearing more, or that's what certainly comes out a lot more in my interactions with entrepreneurs. They are looking for people like us who believe in their mission, who want to help support their mission, and that mission is important. Yeah. And when we roll up our sleeves and really take a dive and, take a look under the hood, if you will, is we're trying to scrub out the financial model. Is this business really viable? Does it really have traction? Who are your customers today? What kind of contracts do you have? How are you going to distribute this? What's your pricing model going to look like, et cetera?
Yeah, and I assume the way your company's set up as well, that it's been helpful from a deal flow perspective. Can you talk to that? Are you getting more deals because they know specifically what you're involved with as an impact investing fund? Or how has that been?
I think it certainly helps hone our deal flow, if you will. It's a little self-selecting.
Yeah, true.
So I would imagine if I were to put it in university or college application parlance, if you will, it's a bit like, we're not Stanford that offers the sciences and humanities and whatever. We're probably a little bit more like MIT, where you've got the engineering and science folks applying, right? Yeah. So I don't have the English majors, I don't have music majors, et cetera. Nothing wrong with those majors.
nothing wrong with those at all. No, of course not. Can you talk just a little bit too with your role at the company right now?
Yeah, so I focus on a few things. One is around driving the operations for the company itself and really rolling up my sleeves and working with the portfolio companies themselves and enhancing their operations, et cetera. I would say that's probably my biggest value add. Okay. And secondly is around driving the thought leadership and thinking around how we want to further quantify impact. So at our firm, we use a proprietary methodology called the impact rate of return. Okay. And that's a method that's been developed by Howard as he did his work at both his family's foundation and also in conjunction, I believe, with the Gates Foundation as well, where fundamentally he developed a way for you to assess how much impact you're able to have for how much money for how much time. So he incorporates the time value of money type of element into making that kind of trade-off decision. So instead of investment A that I can make for, call it $1 million, it'll return me 10%, but I impact 1,000 people, versus investment B, which is for $2 million, but it'll impact 5,000 people, but it'll return me 8%, right? So how do you make that trade-off in that kind of call? And so
Yeah.
that's the kind of methodology that we've got put in place.
Yeah.
And trying to help drive that forward.
Right. I know you mentioned like a proprietary system. Are there any other like just like factors that go into that equation?
Yeah,
Just
sure,
curious.
absolutely. And it's listed he published a book.
Yeah.
It's called Social Value Investing. And it's I think it's a really elegant way that it's been structured. It's a formula structured very much like net present value and impact and internal rate of return. So the factors that would go into it around, it's the cost of the investment, or rather, how much money you're going to be, how much capital you're going to be deploying against it, the time itself, the length of duration of time, and it does depend on what's the KPI that you're looking to impact. So
Right.
is it educating girls, for example? If that's going to be the case, is it the number of girls, or is it the overall economic development for that particular region, et cetera? For green buildings, it's relatively easier and I think more straightforward. It's about how many tons of carbon dioxide have you removed from the atmosphere as a result of the operations or the renovations that you're doing in this building, et cetera. And so it's thinking in that kind of way that we're trying to deploy.
Yeah, and how do you? So you obviously have the system to help you with that, but do you go strictly off of the system output in terms of like this is the best project, or how does that decision is being made around those companies then?
Yeah, so we seek to maximize both the impact rate of return as well as the IRR, like the classic financials.
Right.
And so if you're to do like a 2x2, right, one axis is impact, one axis is financial. We're really targeting that top right quadrant, if you will.
And now we'll take a quick break and hear from our sponsor, Brex. A big heartfelt thank you to Brex, who without their support, this show would not be possible. We've seen firsthand the difficulties accessing basic corporate credit without providing a security deposit or personal guarantee early on. As companies grow, managing expenses has become more difficult and time consuming, which is why we've partnered with Brex to offer a corporate credit card that is not personally guaranteed, offers higher credit limits, provides auto reconciliation, and integrates with ERPs using receipt capture. Brex is the credit card of the startup ecosystem, and we highly encourage you to check them out. And back to the show. So what areas you particular are you most excited about with what companies you're looking at and everything?
Gosh, I am so excited about the level of creativity out there.
Yeah.
That I see. I think it's fantastic. And I don't know if it's because we're here in California, people tend to be a lot more innovative and forward thinking and progressive and adventurous, if you will, with how they're thinking about businesses, whether it be that and or just with the opportunities that are out there and possible in the realm of impact investing. And I love that people really want to help combine those two things together.
Yeah.
Especially, I see this a lot with the millennial generation. They really care. It's not to say us Gen Xers don't, et cetera.
Yeah.
But the emphasis and the intentionality is there.
Yeah. And I definitely will vouch for that. Being in the MBA program at USC, I do notice a lot of people interested in the impact side of things, like actually making a difference from what
that's
they're, which is great to see. I mean, clearly
Yeah.
there's always going to be people who aren't, but
Right.
I just at least notice in my class there's a lot of people who are
that's
interested in
fantastic.
that. Where do you see there being maybe more companies or more opportunity kind of in that industry too?
Ooh,
impact investing.
Seriously, the sky's the limit on this one. I think there's a lot of really great programs here in the U.S. around, and we focus largely in the U.S.
Yeah,
right?
in the US.
So, because if you go global, there's just a ton more opportunity. I feel like I think that especially with a lot of the opportunity zone legislation or the regulations, et cetera, I think there's a lot of opportunities there. Not necessarily perhaps in real estate. I think that that's been kind of a herky-jerky start, if you will, herky-jerkier than I think the government would have liked. But the investing in the businesses element of it is part of that particular legislation. I think it's fantastic. The combination, the emphasis on whether it be environmental or girls' education, enhancing women's education, enhancing people of color's economics, a lot of that is out there. And again, of course, with the climate crisis, there's a ton of energy being applied to solutions that help address that.
Yeah, and if someone's looking to, this is difficult maybe, but if someone's looking to get involved, start a company in one of these areas, what would you suggest, like how they look at which problems to solve, which problems to go after? I'm just curious about that too.
Boy, yeah, I would say entrepreneurs should pursue their passions, given how all-consuming entrepreneurship is. Like you have to love it and live it and breathe it every day.
Yeah.
And so that being the case, if I were in their shoes,
Yeah.
it's got to be an idea that I love and I'm obsessed with. I think obsession is probably a good way to put it. So find a passion, find a topic that is an obsession of yours. And I think once you have that, that's when it'll really fly.
Yeah.
Maybe not a great example, but I could never be an entrepreneur for enterprise software. It's just boring. I could probably do it as a job, at a company, but I would never start up an enterprise software company unless I felt the pain and wanted to do something about it.
Yeah, it's that self-awareness to understand what you actually want. And if a founder is looking to, like if they have a company in kind of that realm of like that would be invested in by IX, for example, I mean, what questions should they be asking potential investors, whether it be IX or someone else, when they're trying to raise money for their company?
Yeah, I would probably some of the classics around, like, tell me about the kind, what types of checks, what are your check sizes, what stages of investment do you guys make, what's your investment thesis, or what are your areas of focus? Because, what you want to suss out is not just the technical details around, like, is this really a fit for me? But also you got to make sure, like, it's a lot like dating. And it's painful, but you want to make sure that this is a longer term relationship. You are with these people for the next 3, 5, 7, maybe even 10 years.
Sure.
So you want to make sure that you like these people, that you can go on travel with them, et cetera, and suss out and make sure that your values are very much in alignment with them. And I think that's particularly important if you're going to do work in impact investing.
Yeah.
You want to make sure that you're working with an investor who will fund your enterprise in a way that is consistent with both your vision as well as the direction that you want to take it in. And granted, there's a lot of discussion around how do you ensure overall, the fund mechanics and fund politics, et cetera, that type of thing that can certainly come into play on that front. But you really want to think through and make sure that you like these people that you're going to be working with.
Yeah. And you mentioned kind of earlier too that some of these other VC funds are not investing in these different areas as opposed to like IX is. Is that then more challenging, you think, for founders to raise money if they're in those type of industries, or how do you see that going for them?
I think it would depend. It requires perhaps more flexibility on the founder's part on how they tell that story. So with investors like us, emphasize the impact.
Yeah.
How are you going to drive the impact? Emphasize the return. The bottom line is, or the fundamentals is, you got to, we're going to assume that you have the fundamentals and market rate returns, et cetera. That's fine. What's the impact? And so that's how you're going to get our attention, is around the impact that you're going to be having. Perhaps with and if it's a technology or software angle, then obviously with a software investor, you want to focus on, here's a technology that is pushing, here's a market, blah, 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 kind of the classics. Yeah.
And with you, I mean, how did you get involved with IX in the first place?
It's very much one of those, right place, right time type of situations. In this particular case, a recruiter actually reached out to me because IX was looking for somebody to help them with this kind of work.
Yeah.
And it was just one of those like, wow, this just fell into my lap. What a fantastic opportunity. I'm going to go find out more. This is great.
That's awesome. And you're interested by it. So like, why did you ultimately join?
I joined because I wanted to continue the work that I'd done in government in the private sector. So with the climate crisis, when I was in the Obama administration, we spent a lot of effort and a lot of our federal dollars in greening our operations, et cetera. But the crisis is one such that we need investments of upwards of $2 trillion a year in order to be able to help stave off the 1.5 degrees Celsius, et cetera.
Yeah.
Governments can't do that alone, period. We just don't got that kind of money.
Sure.
And I believe firmly that we have to bring much more private capital into this particular space, whether it be renewable energies or newer technologies or capturing carbon, et cetera, et cetera. But if you can't get the markets interested in it, it's not going to work.
Yeah. With that too, we talk about all these different issues and everything. Are there ones that you see as like way more pressing than others? I mean, they're all important, to be clear, but I'm just curious from your perspective and having your background, very good background. Are there certain areas you see as more prevalent, more pressing than others?
The climate is one of those things where it's an all hands on deck moment. And so I don't know that you can go too wrong in any direction. Although that said, if you take a look at what are the big emitters, maybe a way to do it is the 80-20 Pareto analysis is if you take a look at the pie chart of where all the carbon emissions come from, a lot of them are around power plants, transportation, buildings, So I would say opportunities in those fields would be a great way if you want to start really helping to tackle that problem. And if not, then let's figure out other creative ways. So can you create a game like a Pokemon Go where people are actually spending real money that helps to address the climate crisis? Can you raise the funds to basically do like a cap and trade, if you will, but via games, and invest that money into other green infrastructure, whatever the case might be?
Yeah, and with IX Investments, how is your time spent day to day, week to week with the company?
Ooh, I do. So there's it's a great question. I do a lot of different things, which is part of the reason why my job is so much fun. Some weeks I am on the road doing capital raises for funds and for portfolio companies. Other weeks we are doing assessments of like the portfolio company's performance and the things that we want to be targeting for them, like what are their goals for this year, that type of thing. And then I would say on a constant stream of evaluating deal flow for the various folks who are looking to join us.
Yeah, and with your role too, I mean, what are maybe some of the biggest challenges that you personally in that role? What's difficult about that?
Know that I would couch this as a difficulty. It's more about, it's a new learning.
Sure.
So learning about the deal-making process. Granted I have an MBA, but one of the things they don't teach you about in business school is a lot of the corporate legal structuring elements.
Yeah.
That stuff is all new for me. In our case, we also have a lot of international or overseas investors. And so thinking through tax efficient fund structures, didn't know that I had to think about that before.
Sure.
Okie dokie then, and so it's more about learning new things and figuring out how best to lean on my teammates and or what other experts we've got, around us to be able to help address those.
Yeah, and with that too, with the team being so strong and they have expertise in a lot of different areas, I mean, how are you is there a formal process where you're meeting up every week to literally share knowledge and discuss things? Like, how does that work within the team?
Yeah, I would say it's a lot more on the job training.
Yeah.
And I think, the regular processes that we have, consist of, we've got a week ahead meeting on Mondays. We've got like a senior team meeting on Wednesdays where we can talk in greater detail around whether it be the firm's strategic direction or various portfolio companies, et cetera. And a lot of this needs to get done type of thing will come out of that. And so, we have the luxury of being a relatively small team. And so we can afford to be more fluid in that kind of regard. It's certainly not, we're not big like a Carlisle, et cetera.
Sure. And with your career too, so people who are interested in making an impact through their work, whether it be starting companies, joining startups that are doing that, with your experience, how have you gone through deciding what opportunities to pursue, how you want to make an impact in your career as well?
Yeah, absolutely. I have always been a mission-oriented person. So I need a mission. I need to believe in the organization. I need to believe in my team. I need to believe in what it is that we're trying to do, regardless of what that mission is. So I would be the worst consumer products person. Unless it had a mission.
Unless there's a mission behind
Unless there's a mission.
Sure.
And every time I have shifted my career, so I've had probably 4 or 5 chapters in my life at this point.
Yes.
It's been about how can I integrate and build on what I've done previously. And it's not just about the last job. It is about everything that I've done. So for example, when I was in the White House, I served as chief sustainability officer. Up until that point, there was really nothing in my resume that said sustainability.
Yeah.
But sustainability is the marriage of a lot of technical stuff around like energy efficiency. How do you think about HVAC systems? How do you think about renewables, et cetera? How do you think about, so that's one bucket. The second bucket is around financing. At least in the government, we were trying to look for more creative financing solutions because of the backlog that we had. And we weren't going to get any more money. Like our budget, we're fighting 2 wars, right? So justifiably the money's going towards, the boots on the ground, if you will. So how do we help address the $20 billion backlog of facilities, maintenance, and upkeep that we needed to make without drawing down unnecessarily on those funds? So thinking through that part creatively. And then last but not least is around how do I help make that change stick? So a lot of the work that I did when I was a management consultant for 10 years is about how do you end up transforming an organization? How do you shift their thinking and do that both in a qualitative and a quantitative way? So that is what sustainability really comes down to for me.
Yeah.
I have the luxury, maybe it was a luxury, it was painful, of, having a very technical background. And so the technology isn't that hard. The principles of physics isn't that hard.
Yeah. How do you make those things stick then? You mentioned, how do you go about that?
Yeah. So you got to make sure that it is affordable, accessible, and embedded in the mainline business, in the frontline business. So for example, when I was in government, my best partner for sustainability, believe it or not, was the Department of Defense.
Really?
Because especially in Afghanistan, 4 out of 5 people that we lost were part of the supply chain. We lost them because they were on the fuel transport up the Khyber Pass. And for every gallon of fuel that we used in theater, we spent 5 to get it there.
Whoa.
Yeah. Right? So
Goodness.
the Army and the Navy, people who have to schlep
Yep.
all that fuel, and they know what it's like, to work that supply chain.
Yeah.
They were the best. And so, you may not hear it as like sustainability. I'm like, I
Sure.
don't care. You can call it whatever you want. Energy, resilience, and security is the actual name.
Yeah.
Fine. But the principles of sustainability are still there. They're the ones that are pushing forth on new fuels that aren't so, carbon intensive and labor intensive, et cetera, that they can have a much more diversified fuel portfolio with drop-in fuels.
Yeah.
I struggled the most with the Veterans Administration because it was very difficult to make a mainline play into their fundamental business model, which is about providing healthcare. They run hospitals around the country, and verily, sustainability is fantastic,
Yeah.
right? Because low VOCs, better in indoor air quality, blah, blah, blah. It helps, reduce your operating costs. But it's not directly tied into, is my doctor interaction better? Is my patient getting better in that overall outcome?
So it's more of a
Things of that
challenge.
nature. So making sure that it is affordable, accessible, and built into the mainline business.
Yeah, and I have to ask more about the White House time with that. I mean, during that time, what were some of maybe your key takeaways from that time period?
From working in government?
Yeah.
Working in the White House is just a tremendous opportunity and a privilege, and just the impact that you can have may not be very well understood at the time, but a lot of the things that we're seeing today
Sure.
around EV charging infrastructure or, green building codes or whatever the case might be to help address climate is very much directly correlated to the work that we did when we were in the White House. When we're hearing things about like the SEC or companies starting to report out on their climate risks, the materiality of that, how does that impact their operations? That is a rule that we put in while we were in office. How do we make sure that if I had more time, I would have loved to have had the opportunity to put in greening requirements for grants. So for universities and research centers, et cetera, I would have loved to have tied like an incentive. If your operations are more green, you're likely to have actually better governance anyway. So that being the case, you're probably better at managing the money. So let me reduce the overhead costs for you, that type of thing.
Yeah, I mean, with that too, and in that position then, I mean, how did you at that time prioritize the many different things you're involved with?
Ooh, that's
There's
a
a
great
lot of different things
question.
you're involved
Oh my
with. I
goodness.
read a bunch of them.
Yeah.
How did you prioritize that? How'd you go about that even?
So there's a couple of ways. First was around, back to the Pareto analysis and the percentage chart
Right.
of how much carbon emissions. So that was a great way to help prioritize, number one.
Sure.
And then number two was also the amount of dollar spend. So depending on the scale, so for example, the federal government spends upwards of $450 billion in goods and services, everything from dog food to satellites is my half joke. So that being the case, how can we help impact that? That has secondary and tertiary impacts down our entire supply chain.
Yeah.
And so how do we think about it that way? Also with respect to addressing the policies in our own personal, or rather I shouldn't say personal, but like the government's policies for actions being taken frequently serves as a model for whether it be other state and local governments or other entities as well. And so how do we take that into consideration?
Yeah, and then coming full circle to IX investments again. I mean, what's the goal moving forward? What are you hoping for in the next few years as well?
Yeah, our goal is to ultimately go public in a few years' time so that, again, everybody can invest in impact investing, that it is a mainstream way of investing. It'll no longer be, ESG and SRI or social responsible and whatever, insert additional name. It's just investing,
Yeah.
period.
Awesome. And any final words for any entrepreneurs out there who are, as I said, trying to make an impact through their companies, or anything else you'd like to mention to them?
Yeah, absolutely. I would say it's probably the fundamentals, if you will. Make sure that your business plan is solid. You're thinking through who are your competitors, what's your market landscape look like, how are you going to go out and do customer acquisition, and then last but not least, how are you going to quantify the impact? In our case, make sure that it is embedded front and center
Yeah, and you say that, but how are they going to qualify the impact? I mean, how do they actually do that and portray that from their companies? They just have to track those metrics, or
Yes.
Okay.
Yes, definitely track the metrics. And in addition to, let's say if it's a customer acquisition thing, how many of those customers are of a particular impact group that you're targeting, or whatever the case might be.
Yeah. And Christine, where can people go to contact you and get in touch and learn more about what you're doing?
Yeah, so our website is ixinvestments.com. So please come check us out.
Awesome. Thank you so much for the time today.
Thanks
Appreciate
so
it.
much for having me.
Thanks for checking out Startup 2.0 from Spark XYZ. If you want to learn more about startups and investing, you can check us out and join the ecosystem at sparkxyz.io.